Welcome back to Author's Note. The African growth story keeps rolling on, with the IMF forecasting around 5 to 6% growth. But what about the equity markets? Last year was the first year in which Africa outperformed other emerging markets since the financial crisis. Here with me to look as to whether that is sustainable is Stephen Bailey-Smith, Head of Research at Standard Bank. Stephen, thanks for joining us today. As I said, last year was the first year in which Africa outperformed other emerging markets since the crisis. Can you explain a little bit perhaps why?
Let's look at the chart, shall we?
Let's go to our first chart.
So actually Africa, ex-South Africa, so it's predominantly sub-Saharan Africa, although there's Morocco and Egypt I think are included in there, was up about 46%, and that compares to emerging markets that are up about 15%. Actually other frontier markets, interestingly, were actually only up about 15% as well, broadly in line with the emerging markets. Part of that is the rising tide. So this is about global liquidity and the search for yield, and that's about foreign investors coming in on the G4 currency. And part of that is about the idiosyncratic stories that we have in Africa, particularly in the three dominant participants within that index, which is Nigeria, Kenya and Egypt.
Well, if we look at the chart here, there's clearly a crucial point around the midpoint of the year in 2012.
Yeah,
what happened here?
Yeah, this period here was sort of, May 2012 was where the markets globally changed. It's when Draghi came out and basically reassured the markets. So that created the risk climate which we saw in actually most risk assets, not just in equities, but across the board.
And you mentioned the idiosyncrasies of the market. What's driven some of this?
So if we look at Nigeria, in Nigeria and Kenya, it was very much about the currency cycle. So we had a kind of crisis of confidence in 2011 in both Kenya and Nigeria. Rates in both countries had to be raised to 22–23% in the front end, which were, obviously compressed equity valuations and equity performance. And as those yields have come down in the first half of 2012, then the equity markets have started to take off. Particularly the banking sector in Nigeria is up over 60% this year, and actually mainly the banks along with Safaricom in Kenya as well. Egypt obviously was a slightly different sort of kettle of fish. We obviously had a political crisis there through sort of 2011. I think people got a little bit more optimistic there in 2012, but again, as with Kenya, as with Nigeria, off a very low base.
So if we look at our second chart now, which is looking at bond markets, again, you talk about how the risk sentiment has meant that African returns have exceeded other areas. What does this tell us?
Okay, so the JP Morgan's MB Global is the sort of benchmark for emerging market dollar sovereign debt. That had a huge outperformance. Again, May was the sort of turning point. On the year, it was up about 18.5%, which was a tremendous performance by any standards, sort of globally. Africa outperformed that predominantly because there's a higher yield. So although the two are very closely correlated, the higher yield in Africa meant that it outperformed. There were particularly some very important stories there. Côte d'Ivoire rebounded. It's a large sort of individual bond. Côte d'Ivoire's Eurobonds were up about 91% last year, so a huge sort of performance.
So is this sustainable? That's the big question for investors in 2013, whether it's bonds, whether it's equities. I'm putting you on the spot a little.
I think for the sovereign debt, I'm a little concerned about the asset class. The spreads are probably 100 wide of their all-time tights on the MB. I think we can tighten in a little bit more, but I'm not convinced that we're going to get the price appreciation that drove this, predominantly actually because Treasuries, the underlying instrument, sort of increased in value. The price went up. So I think if you accept that Treasuries are going to be fairly stable as a base case, that they don't sell off, then I'm looking for Africa to deliver sort of 7 to 10% and MB to be sort of 5 to 6% this year, so significantly lower than last year. However, on the equity side, I think we're looking for that African index to do another 30 to 40% actually.
Well, Stephen, thank you very much for joining us today. So for 2013, perhaps another year of outperformance in Africa compared to other emerging markets.